Yo, what up? We are back. Welcome to episode 5 of Money in the Future. We are here trading Nasdaq contracts. I got a pop-up when I first opened the Trade-O-Vate this morning that said my current chart had a much lower volume than the main chart or whatever. So apparently this is a new lesson for me, and again, part of the reason I'm streaming this is to learn some of this together. But the new lesson for me is when to switch contracts. This whole fall and winter, I've been trading on NQZ5, a chart that was supposed to end at the end of 2025. I guess here we are, 2 weeks left in 2025, so that explains why people are hopping over to an H6. Those contracts for the Nasdaq won't expire until deeper into 2026. So there's still some like studying or learning or lessons I need to do to understand exactly why we're changing and which letter is the appropriate, because there's multiple contracts, there's multiple letters. That part I'm not 100% clear on, but I do recognize that the volume on the NQH6 chart, similar to, I don't know if you can see right here, I moved over to the gold G6 chart. So my Z5 for NQ, MNQ, or whatever, those are still there, but I don't think the main trading volume is there now. I think it's already rolled over to the H6, so I'm gonna keep an eye on both of these and pay attention to where I take trades from. It's been a slow start. Monday morning I had a busy weekend and a late weekend. I think Saturday night I was working with one of my many sources of income, one of my many streams of income, and it was a night shift that we got off much earlier than expected, so shout out to them. But I still didn't get home till like 5 a.m. West Coast time. Makes it really hard. Your body clock needs to adjust to. And then last night I was out. Well, shout out to HEC. That's something we can go into later. But last night I was at HEC and still made it back by like 11. And then by the time you handled things at home, actually get to bed, waking up for that 6 a.m. Alert, not the easiest thing in the world. So clearly, as I open the chart, I see what we missed out on this morning at open was another one of these moves straight down. Now again, you have these type of candles with the long wick at the top, which means it was trying to sell back up, but ultimately it just bled. This is one of those trades where you could have just went short up here, kept your stop loss above the high of day, and rode it down to big money. So similarly here, we're currently trading between the 14 and 50 EMA on the 5-minute chart. Let's go ahead and check this out on the higher time frames. This is such an interesting reaction, the way it reacted, back that high to the 21, just to get flush right back down. We're hanging out around 25,400 areas, just above that round number. This is an interesting line. I did not draw this line today. This is previous support that I drew. Honestly, not even last week. I feel like last week I extended it from a previous week. So it's really interesting to see that it somewhat respected this level. We have a single 5-minute candle to close below it, just for it to pop above it, and now we're headed back towards this level. 394, 441. God, that's pretty high. So you've had a lot of strong reactions right down here at this area. I really would have liked a short off the 14 EMA, headed back down right there. Kind of missed it. Let's see what this There's 13 minutes left in this hourly candle, so let's check the 1 hour chart. Looking like a straight bleed. Even the reaction back up, totally pushed back down. That's really interesting to look at. That was a 25 point drop since I started looking at the times. This is really interesting. Where did my support line just disappear to just that fast? I drew that. Oh, I don't like that, Ep5. I don't like that one bit. There it is. See, it popped back up on this time frame, but I don't like that it disappeared on the 5 minute. I need that there for my visual. Come on, Ep5, what's popping? I don't like that. I'll go to the 15. I see it. I'm gonna continue to extend it. See if that makes a difference here. Maybe it did on the 5 minute. We're gonna go ahead and continue to extend it, because I do think that's an important level here. We had another reaction back to the upside. If you were trying to short this move, it bounced off the 80s back to 25,395. So yeah, it looks like you got some strong support down here. It has not been able to break below this level. Man, so this is an interesting area. A lot of chop has happened since the big move. There are a lot of people out there that are good at trading a range. So they see this start to form, and you can, short up here, buy down here, and just continue that trend every 5 minute candle or so, let it play out. And as we hang out right here below the 400 level, it's clear that we have not gotten a close below 25,375 in a cool minute on these 5 minute candles. But again, to me, visually, this looks like, like a potential bear flag or whatever. It came down, it's chopping, it's making a new base and headed down further. However, all the reactions right here at these wicks have me unconvinced. I would like to see it break this support level for the next leg down. Then I might take a trade there. Obviously just missed a couple of points, headed down to the zone. There we are, 366, headed lower. That looks like a very clear break of this trend with this new 5 minute candle. It's only been open for 20 seconds, 30 seconds, no top wick. And look at the strong reaction again right off that support level. So is this the time that the support level gets broken and we go lower, or does it hold for another chop back up towards those EMAs? So far it's holding, so far it's popping. There's only 10 minutes left until the hourly candle closes. And there's the reaction back down towards that support and below it. We just broke below. Let's see this reaction down here. Looks like we're headed lower, guys. Looks like we are absolutely headed much lower. Getting still some reaction down here. This is tough for me because I see it bleeding, I see it breaking. I want to take the short, but I gotta pay attention to the time and the reaction levels. There's a lot of people who saw that level break and said, hey, we're going down further. They might not be wrong, just based on all of the indicators, but you gotta let this move play out. And there she goes. Again, still down to that level. 350 seems like to be our new reaction level. 349, 350. See if it wants to continue to push lower. There's 45 and there's 40. So yes, this does look like the next leg down. I'm gonna wait for a little bit of a relief pop and then try to catch some of this move. See, there's back in the 40s that quickly.
Order filled. Order filled.
Guys, I did that on NQ on accident. I don't usually take NQ trades on here. Very grateful that it it was the right trade, but I saw that price moving and closed it pretty quickly. Damn, and looking at it, I should have held. We're gonna pull up MNQ as well, because I can always take extra contracts on the MNQ H6. Yeah, look at that break below. Definitely okay with how that first trade played out. Fees included. Whew, that was a trade right there. All right, so like I said, we're still getting this reaction off this level. As much as I wanted another leg down, hey, we got a little profit on that first move, so I'm gonna go ahead and be patient now, let that hourly candle close, lock that profit in, and wait, be patient, yeah. Look at that strong reaction from down there. This candle still has another 90 seconds, so there's no guarantee, even with that bottom wick right there, there's no guarantee that it's gonna close below this support line. It'll be a really interesting move to kind of trap shorts down there, and then at the close of this hourly candle, just kind of continue that upside reversal. If you notice, remember there was still a really big buy down here that brought it all the way up around the 320 level. These candles, sent it all the way up to 25,520. So from 320 to 520, that was a 200 point bounce. And just like that, we are back above the support line. It's a very fast reaction. So again, I was short on NQ down here. This reaction back up certainly could have cooked me if I hadn't paid attention and got out of that trade when I did. Now, I'm not averse to trading NQ. I don't like trading NQ on the live stream because my brain is already divided into a couple different directions of trying to talk, trying to manage OBS while also trading. There's music going on, there's life happening at the house, like there's things happening. So it's a lot harder to pay attention. I'm not averse to trading NQ. I do trade NQ, but I like to just be able to be really focused because those are much bigger, much faster moves. As you see, I could have even cashed out that trade for probably double the win, but by the time I realized what price was doing, I was like, oh shit, let me just get out of this one. So we're all good. I'm happy to take that win. If I see an A+ setup, yeah, sure, I'll take that on NQ as well. I love to, lock in those bigger gains. But on stream, it's a little bit trickier until, and honestly, I've been contemplating how to play this at the top of the year. Considering like what kind of accounts I want to trade, because I think if I get a brand new Lucid or TPT 50K, then I think the drawdown on those is high enough to still trade NQ. I just told you the reasons why I don't like to trade NQ on stream, but the obvious reason that you would want to trade NQ on stream is those profits, those green trades, those wins, makes it so much easier to make a clip, to show somebody like what's going on and to convince them that this is a worthwhile pastime. MNQ obviously more about building the skill of making the right decision. If you're comfortable with these trades and you take them on NQ, a single positive NQ trade pays more than most people's 9 to 5 on a day-to-day basis. One single trade, like I said, and look at, we got 4 minutes before this candle closes. I do want to just let it finish, but we're back below that support just by a little bit. But yeah, I was saying, when you trade NQ on these charts, I'm a momentum trader, I'm a scalper. I'm not looking for huge multi-100-point moves. 10 to 15 points, I'm happy. I likely will take a 5 to 7 if I'm not liking the momentum or the price action. So a 10 to 15 point scalp on NQ is still over $200. 200 to 250 in a single trade. On Friday when we were here, I took 5 trades on stream. I think 2 or 3 of them were 8 to 10 to 12 point trades. So if I took those same 3 trades on NQ on the Friday stream, I make more than the vast majority of the country while sitting at my house, in my computer chair, mad comfortable. Like it, using NQ in connection to the live stream is the best way to promote the idea of futures trading. Speaking of the Nasdaq, obviously there's the ES, there's gold, there's other things you could trade that also show, good strong returns. But I just, I'm a Nasdaq trader. I like those tech stocks because I know what those companies are doing. Most of them in the top 10 are very front facing. They always have news and information. I can identify their CEOs, etc. So yeah, this is the reaction in the opposite direction that I was talking about for the close of a 1 hour candle. This is why I got out of that trade and I waited. Imagine if I was short down here with NQ and now I'm watching it pop above the resistance line that I shorted from previously. Now I don't think this is any sort of like indication of a reversal, even though it is a bullish hammer candle. I do just think this is the close of this 1 hour candle where you often see a reversal back in the other direction. Simple as that. But yes, a couple good trades on NQ, and you click those up for the public, and folks are seeing you make either hundreds of dollars in seconds or thousands of dollars in minutes, typically, depending on how you trade. Those that trail and hit their stop losses and all of that. Absolutely better for promoting the stream to other people. You see somebody sitting in a chair at a place that they are obviously comfortable at, like a home or an office or anything of that nature, and then you see them make more money in the few minutes that you're watching them in the chair than most people make in an 8, 10, 12 hour shift outside, busting their ass, breaking their back. Like, that is the way to advertise futures trading to other people. You take some NQ trades, you see how fast those numbers move, and that's the best way to get more people on the stream, to convince people that futures trading is a viable means of income, a viable source of income, because those gains just happen so fast. Of course, the losses happen fast too, and this is why I say I don't care to take those trades on stream while I'm trying to talk, while I'm trying to manage OBS, etc. It can happen so fast, these reversals, these pops, these whatever. And as much as it's great to convince people, like, hey, here's the big money, here's how you change your life, here's how you change your family's life, I do think I can take some of those NQ trades top of the year with some more drawdown. I want to keep this lucid account safe and in the green, and a couple of bad NQ trades, because again, I'm a 10-point scalper. So obviously when I'm setting my target levels and my stop loss levels, I don't want to lose more than 10 or 15 points per trade either. You're never going to be right every time, but you gotta, one of the most important arts of trading is learning to cut your losers fast instead of letting them run and become 30 point, 40 point, 50, 100 point losers. There's no purpose. I have absolutely done that before, letting a trade run just thinking like, hey man, I was wrong, but I can't be that wrong. It's gonna come back this way. No, it's not. No, it might not. There's no guarantee. The holding and hoping is not the same as like, hey, this trade just broke the market structure that I was expecting it to respect. Once the trade, and that is a thing that I do think I've gotten better at, rather than just looking at taking my entry and then looking at a random 15 points, 10 to 15 points to the upside and 10 to 15 points to the downside, and letting that be my zones and my spots, rather than trading like that. Getting better at taking those trades in an area where the market structure is respected. Again, talked about being able to take this short up here at the top of the open, at the open of day, and as long as it didn't go back above your close above this line, you could have just rolled this down. Now again, this pop back in this direction, you're gonna lose a lot of that profit, that drawdown. You gotta pay attention to that. This is why people still take profit during profitable moves. But That's a big win, and a win that you can sit in comfortably without it still reacting against you. Had I sat in this trade, I'd still be down after the 10-minute candles, two 5-minute candles, instead of taking my profit down here, which I did, and waiting for the next setup. Especially trading these afternoon sessions instead of the morning. We do know the morning, like I said, it's harder to wake up on a Monday at a busy weekend, whatever. But we do know that the morning gives a lot more like true directional moves. There's some early fake outs. Again, this long top wick might have you confused or convinced, might have cooked some longs thinking like, all right, this is the low, we hit the 200, we're going up. Nah, bled. But so there's still people that get this wrong, of course, but the mornings have a much easier pattern to follow. When we get to these afternoon sessions, it is now 10:03 on the West Coast, 1:03 on Wall Street, and when you get to these lower time frames, you can see a lot more. Later time frames, you can see a lot of the chop, a lot of the slower moves. We're not having the bigger candles that you had at open, and that's okay. But that makes that means that your trading strategy does have to be modified to keep up with what you're seeing. And again, that's a very strong. This is the open of a new 1-hour candle. It's only 10:03 Pacific. So this is very interesting to see this hammer candle with the long wick. So we already closed up here, just to come all the way back down below the support line, just to get pushed back up. And now this candle is doing the flick, deciding if it wants to close as a red candle or a green candle. Still 45 seconds for it to decide. A nice long bottom wick that could convince longs that, hey, we found a new low down here, we found a bottom. I don't feel that way. I obviously will let this candle finish closing, but I am interested in another short up here back down to the support line, as long as we don't close back above the 21 EMA, kind of the 14. Now that we've dropped a little bit, yeah, this candle wants to close red, as that fake out like made it look like it was a bullish hammer candle, but it just closed red. New candle open. So let it go ahead and put in a bit of a top wick. Hold it up like that. I like that.
Order filled.
All right. Now we could still be bullish from that last move. Again, this is why I take these trades on MNQ and not NQ, so I can talk them out on stream without. This one would have already, it would have went against me $80 real fast before coming back down. So again, my mental level is gonna be a close. But let me see, what was my entry? 25,384 was the entry. We're seeing the price come up to try to test this 14 EMA right here. Not totally surprising that it's punching that 14 EMA, but I would expect a stronger rejection. Yep, there we go. As we get up there's that rejection I was looking for, and I just like to see it continue back down to the support zone. Might not happen in this particular candle, but that's why I took the trade up there, just seeing that's a newer, higher level of resistance. That's not guaranteed that it's gonna hold longer term. This is why you have to decide your zones before you take the trade, not after you take the trade. So my entry was 23,384. We could definitely have this pop to the upside. It's not uncommon. But I want a close above there would be different for me. I'm not surprised that it's testing these EMAs. I probably could have waited for a slightly better entry. And see, that is a 10-point pop from my zone, and that's why I said I didn't want to see it up above that EMA, and then closing above that EMA would be even more concerning. If we get that pop, then we got that pop. There's not much we can do about it. But again, there's a pretty strong reaction off the 21 EMA. I would say this is still a bearish setup. If I saw it testing the 21 EMA, this is the other thing that I got to get better at, is waiting and taking the trade up there at the 21 EMA. If that was my mental plan all along, is saying, hey, I don't see the problem with that setup though, is if I take the short up here, where's my stop loss? I can treat this EMA as a bit of resistance for now, but if I had taken the short off of the EMA, then I don't know where to, other than back to the arbitrary 10, 15 point windows, I wouldn't necessarily know where to close this trade if it goes against me. So that's why I find it harder to take the trades right off the EMAs rather than using those EMAs as levels that I wanted to respect. So there's no guarantee that this trade will go in my favor, but I do, again, that wick above, I could have just closed and said, oh man, I'm down 10 points, I had the wrong idea. But this is why I said I wanted to close above that EMA, because just because it can wick up there doesn't mean, yeah, price can touch up there, but it doesn't mean, we've just had a 7, 8, 9 point reaction back to the downside, which again, that's why I wanted it. I took the trade in that zone so that I could use that EMA as that resistance level. No guarantee that it'll hold. The very next candle, there's 45 seconds left in this 5-minute candle. The very next candle could very well refill this wick and go to test the 50 EMA. Not out of the question. But this is why you don't, I use that level as a resistance level, and you wait to see what happens, because now you have a long top wick that, again, it might still try to fill it up. There might still be some bulls that like to buy lower down here, but you got that long top wick, so that lets you know that there's still some sellers up there, and that's why I took the trade. That's why I respected that level. And now we can see it's still being pushed down a little bit. We got 5 more seconds in this candle. There's no guarantee that the next candle won't fill and immediately give us some of that upside, even if it's just putting in the top wick there. We got a top wick that is touching the 14 EMA. And now you just got to give this candle some time to form. This will be the candle that tells us whether this trade was a good trade or not, very likely. I'd like to see some more rejection off those EMAs now that we tested them and couldn't break them. But also, like I said, there's no guarantee that the next candle wouldn't just come back and fill up that same wick that was just made. I've seen this pattern take place before too. And this is why, you can trade off wicks, but I like to trade off of close. I like to see that the candle actually form and show its hand. So yeah, look at this display. I saw it looked like it just wanted to put in a top wick and go lower, but actually the next candle, all it did was turn back around and fill up the wick from the previous candle. Not an unfamiliar pattern. Have seen it before. And I know I said a close above that EMA would be my sign. But also, if we get like a rocket above it, if it wants to go test the 50, I'm also gotta be out of this trade too. I know I said a close, but you also have to. This is a real know when to hold them, know when to fold them kind of moment. Absolutely another test of patience as we watch price flick between the 14 and 21 EMA. And now again, had I taken this same trade on NQ, because I took the first trade on NQ, it would look a lot different to sit in a trade down, 11 or 12 points. I'm still, again, want to just use the market structure as my zones. Not going to be right every time. So, you just pray that price continues to respect those zones. But if I'd have taken this same trade on NQ, I'd have been out a while ago just off of like looking up at the negative P&L. And again, I'm seeing a lot of fight up here at this 21 EMA, so I could still, still be wrong on this trade. There truly is no guarantee. We're just hanging out right here at that round number. I've told you guys how I feel about these round numbers before, which is again also probably why another good reason to take the short up there closer to the round number, because it would have already come back down and given me those profits I was looking for. So now this hourly candle has been open about 10 minutes. I want to just go ahead and check the higher time frames while we're waiting for this trade to play out. I don't like the look of that as much on the 15-minute chart. The fact that it looks like a bullish hammer candle. Still being pushed down above that 400 level, so we'll give it some time to work out. On the hourly chart, you can see red, green, red, green. So far, this candle has started green. Maybe it wants to build out a new base down here on the hourly, form some market structure rather than continuing the bleed. That's totally reasonable as we see it pop right there. Continuing at this round number, it's having a nice little tug of war right there around the 14 EMA, the 21 EMA, and that round number of 25,400. We could definitely see a pop here, and that would be my signal. We could definitely see a drop here, and that would be my joy. And it looks like we got a break above that 400 level. This candle wants to close in 30 seconds. So the chance that we get a close above this 14 EMA has just increased dramatically. 21 EMA. The chance that we get a close above this 21 EMA has just increased drastically. We are still hanging out right at this round number, but slightly above it at 404. And with 10 seconds to go, it does look like this candle wants to close. Oh, wow. Would you look at that? I want to respect these EMAs, but it does, that candle just closed, and it closed right on the 21 EMA. Nope, technically just above it. It closed above the 21 EMA, and now we're having this reaction. I'm gonna allow this candle to form. If it wants to pop beyond this wick, then yeah, I think you have to take that as your sign. There it is, good people.
Order filled.
All right, so at 411, you have to respect the market structure, and that trade wasn't the one. So we get some wins, we get some losses. It happens to the best of us. Lame. So I'm seeing a reversal up here now, and I'm tempted to look at how much it rejected up here. I said I didn't want to see a close above that 21 EMA. And it's hanging out right on top of the EMA, but it definitely pushed below it again. I think this price wants to come down underneath the 14, damn, which is still at 394. Let's check out this candle's behavior. Some real indecision, long top wick, but a long top wick over that 21 EMA. Really unfortunate. Look at that drop back below. And I think my impulsivity kind of got me there. I saw what I thought was happening and wanted to catch it quickly before I could fully talk it out. Again, this is part of the reason why I don't want to take NQ trades on the stream. I would not have been able to talk that out at all, as I'm barely able to talk this one out. As we see it coming down to test that 14 EMA, this same trade is potentially playing out. It's just the timing of it all just like that, price comes down. I want to take that 10-point win to get back to break even. So there's 2 wins on this stream and 1 loss. We are still up. Checking the phone real quick. Yep. And this is another trade. I was glad to take those points because you don't know how it's gonna react. But I did want more of that move. I wanted to see it come down to the support zone again, and it looks like it may want that. The way it broke the 400 level and came back to the 380s very fast. That's why I jumped back in that trade. My timing was off. I closed and then I immediately got the move that I wanted. That really sucks when it happens because clearly my theory was correct. It was just the timing that was a little bit off. And so here we are below these EMAs and price is making that move I wanted. So I'm going to take another 5-point scalp for a win. We are back in the green, not break even anymore. And look at that, price down in the 75s just that fast. I really despise when I close a trade and then the very next candle, because I said if it wicks that far above the 21 EMA, it probably meant that I was just wrong, right? Look at that candle's reaction. I was not wrong. It was just the timing. So I'm very glad I was able to take 2 positive scalps off this candle from that quick reaction. You faked me out up here. I could have just held that first trade a little bit longer and there wouldn't be any losses in the account. But we don't care about losses. Everybody takes losses. We care about keeping the account, having green days, more positive than negative, more wins than losses. Everybody's gonna lose. The Thunder just lost to the Spurs, you know. The Dodgers were clearly the greatest team all year. They had a lot of losses. They won the World Series, but they lost a lot on the way to that World Series. So that's the kind of mindset I like to approach this trading with. There are superstars out there that are, the athletes, the LeBrons and the Stephs and the, now the Wembys, the new generation. But all those guys lose. They are winners at life, and they've all lost on the court. Lost a game, missed a shot, missed a free throw, missed everything. There is no guarantee. And as we look at this price coming down, 25,375. Looking like it's putting a little bottom wick. So we are in a chop area for sure. I'm glad that these 2 trades were scalped. Visually, I wanted it to come down to my support line that I drew because we see the reaction that it had down here last time. You don't always get that. It reacted here on these candles. So why would it also come down just to react there? You gotta play that part of market structure too. Because we see this candle showing a little indecision, flipping between green and red. This is when you want to go back to the higher time frame to just confirm, like, hey, what am I seeing? This is some chop. Remember, I said I didn't like that bullish candle that I saw on the 15-minute chart. And look at the following candle. This body has basically engulfed that entire move. Now we still got this long wick down here, but I'm happy I reacted quickly to the fake out up here. I still took a 17-point loss by closing this trade just to watch it react. I got all those points back. I'm happy about that. But oh shoot, I left you guys. I've been pointing at the chart for the last 3 minutes while not having you on the chart. So there we are, 25,370, and it does still look like we want lower. That was a trade that I could have stayed in and then not close. The same way I said I don't want to close this trade if it has a candle, if it doesn't close above the 21 EMA. Well, what did this candle do? Closed above, wicked up here, just to bleed. This one closed above, this one wicked up that much higher, just to come back down. Here we are, 25,360. Those fake outs are really tricky. So what do you do here? Do you buy here for another bounce from this zone? Seeing as we have all these bottom wicks, look at that. Look at the quick bounce off here. There's a world where buys down here make sense. I don't know if it's my world, just because we're below the 14, the 21, 50, 200, and our yellow line VWAP right here. If we're hanging out below all of that, what's bullish? What's bullish? If anything, this will be a you know, like it's not quite a dead cat bounce because it's not like a super bleed, but like continuing to pop off this area, like there's no guarantee that it's gonna hold and for how long and for what, you know, like. Good to know. That was it. All right. So yeah, as I look back at the chart, short term, at least a buy off that level would have still made sense. There's a 12-point pop off of the 360 down to, up to 370, 372. So far that level is holding pretty strong. I imagine people were faked out right here pretty badly, but once we get an actual break and a close below this level, I wouldn't be surprised if we see new daily lows. We're testing the lows. We're below all the moving averages on the 5 minute. Let's see where we are on 15. Same, below all the moving averages, hanging out right at this level. 63. Do we get another bounce off this level, or is this the level break? We saw it come down to test this level, pop all the way back, 12 points to the upside. As a 10-point scalper, moves like that are very relevant to my trading style. Alright, and just like that, we're back at this level. I see a wick below the level. Is this the level break? Remember, we had these candles down here. We've seen these reactions. So, if it's a true level break, I expect it all to happen rather quickly. That candle just closed below for the first time. So, we have a new 5-minute candle that just opened, and it put in a little bit of a top wick. There's some upside as it pops back. But yeah, now this level might flip. Level might flip as resistance. And on the short term, a lot of times, what I neglected here, because it could have gone against me like way too hard. What I used to do a lot of times, look at that level still holding. What I used to do a lot of times in swing trading is I needed 2 consecutive closes, above or below my zone as confirmation. Oh, and as this candle flips red, it does flips back green. We got some indecision. I'm surprised because I thought a break below this level and a true close would show some strength to the downside, would show some actual momentum. We are hanging out right at this support level, but the support might have flipped to resistance, so it's having a hard time getting there. I would have expected, if it can't get up, it's gonna bleed.
Order filled.
Let's see if this makes a new leg down or it tries to close back above that support zone that was now behaving as resistance. My entry was 25,349.50. And this is the move I was looking for there. Let's go ahead and close that for a 7-point win. I do expect it to continue down. Again, just some strong reactions down here last time to the upside has me not wanting to hold this trade. But what I do expect now that I see this break is for market to bleed a little bit and then form some new structure down here. If we get some real momentum to the downside, it could hunt these daily lows, 25,286. I do want to get better at holding, but as I see that bottom wick, again, I shorted at 49. We're trading at 40. So that's a 10-point scalp. That is my strategy. I think I got out for a few less than 10 points, but following my strategy, I think, is more important than capturing those couple of extra points, simply because the strategy is repeatable. The strategy is something I can approach the market with day by day by day with the same thing and continue to take more wins than losses, have a higher win rate. If I'm waiting on those points because I'm so determined to get 10 points instead of 8 or things like that, I think I end up, like, just as you see this bottom wick reacting back up to the 44s, I would end up leaving a lot more on the table for my wins. I want to get better at trailing, but I think a lot of these trails need to happen. For example, now that this is a good trade and I'm out, theoretically, I entered at 49. I'm trading at 45, so I've still been up. I could have held and just waited. As long as we don't close back above this red line, you just hold the short. Just hold it. What I'm considering is, like I said, maybe getting a couple new Lucids or TPTs at the top of the year and testing these theories on separate accounts. I get real tight about like this current account that I'm trading on, because it's green, it's over the original threshold, it's over, the daily loss limits, the drawdowns, all of that. Like, this account has more wins than losses, and I've even dug it out of a little bit of negativity. So it's hard to take and look at price wanting to go lower. It's hard to take the risky trades on this particular account. I do want to get an account where I'm more comfortable letting the risk play out, win, lose, or draw. Right now, if I had decided, and I think at the top of the year, that's my plan, to get probably more Lucids. If we're just being honest about all of the prop firms right now, I think Lucid's big advantage against the field is the one-time payment. One time. Who wants the monthly? Like, as somebody like me who is comfortable trading MNQ, taking my base hits while I perfect my strategy. Look at that reaction back to the upside. I would now be down 3 points on that trade if I had held it. It still hasn't closed above the line, so as of now, there's nothing telling you to not. But that long bottom wick and then the start of this next candle being green would have certainly been concerning. And just explaining more why I close these trades. But Lucid, I'm gonna potentially grab a few more Lucids, a couple Lucid Pros to have some fun with, and then maybe a Lucid Direct as like a Christmas present to myself to just like be getting to it. But yes, I think Lucid has look at that reversal. I think Lucid has an advantage over the field with the one-time payments where others want monthly. So, and I think somebody like Apex, look at that. I'm happy with my green trades. I could have stayed in this trade, and look at it wants lower. For somebody like Apex, who they've been running a lot of deals, but where they get you is the activation. See, so they've been cutting and slashing prices, but it's because they just want you to get in the test, and then they even advertise like, oh, you could pass in 1 day, you could pass in 2 days, depending on the promo they're running or whatever. And that is a gambler's dream. That's somebody who wants to, take a swing that they cannot repeat every week. I'm gonna do this again next week. I'm gonna do this every Monday. That's not the pass in 1 day is encouraging a trading style that is not copyable, that is not repeatable, something that you can't show up and do every day. So I don't really care for the idea of you can pass in 1 day, because it teaches you to try risky trades that, again, they might work out. It's gambling at that point. So a lot of gamblers win, a lot of gamblers lose, but you will be gambling instead of trading. So yeah, a lot of those guys, TPT, I don't think offers the pass in 1 day. You gotta, I think their minimum is 5 days, which again is closer to the idea of they want traders to be able to repeat these things, but they still have a monthly subscription subscription fee. The Apex, the same thing. They're lowering some of those fees to get you in the door, but all they want is people to YOLO on tests, do crazy things, and then if you pass the test, guess what they're gonna say? Activation fee. They're gonna get you a big old activation fee. I like Lucid, especially for the idea. I'm thinking a couple weeks from now, 2026, I'll start the top of the year with a handful of accounts. Knock on wood and all praises to the Most High, this account is still green and successful, you know, as we're talking. So I'm talking about adding accounts on top of this, as Clay would say, horses in the stable. You want multiple horses in the stable. But yeah, I do think I could take a Lucid account, maybe a 50K Lucid, and swap out of my account that I'm too, if I had a few and I could be like, this is my daring account, this is my challenge account, this is my I'm gonna hold an account. Because right now my trading strategy works as a scalper. I want to trail my wins. I want to hold some of these longer. Look at that reversal again from the bottom. See, this is a tricky area that I would have had a hard time trading in. I'm okay rationalizing my scalps at that point. But yeah, I think I'm gonna grab a few more Lucids to be able to try different things without risking the account that I'm already comfortable with. I think that's the idea. I would never be able to do something like that. This is back to the advent of prop firms and why they're good for us traders. I would not be able to do that at Charles Schwab. TD Ameritrade is what it used to be. I like Ameritrade more than Schwab. They oh wow, look at that. They bought out most of the tools, but not they're just not as a user friendly of a broker. So but I imagine if I'd opened Thinkorswim and tried to do this same thing, if I said, hey, I want an account where I take small scalps, 10, 20 points on Nasdaq, and I just want to build it over time. Cool. If I said I want another account where I can take some risky trades, maybe like swing for several hours throughout the day, I wouldn't do that on the same account. But if I had a different account and I was doing that on Charles Schwab or TD Ameritrade or whatever, wow, look at that reversal. I need like another 25,000 plus just to have the other account just to have fun with. Who wants that? Who wants to or who has the ability to do that? I think if you are in the position where you can open another cash account to trade, that I don't know if sitting in front of the computer trading futures, for hours of the day is the best exchange of your time if you already have those resources. You can probably deploy those resources differently to make better profits. But for those of us who don't have it like that, to where it's like, oh, I can just open another 25K cash account real quick, and yeah, that's not how that works. So I wouldn't be able to do this on Charles Schwab or TD Ameritrade or any of the typical brokers that still trade futures. Thanks to the advent of prop firms, I can now challenge myself and attempt things that are, if they work out, they're still profitable. It's not paper trading. I can open Thinkorswim and paper trade till my hair turns blue. Knock on wood. Nobody wants my hair to turn blue. But yeah, I can open up. Oh, look at that. See, like, this is really nasty price action. Sorry, just the way that candle filled up, very bullish hammer, just to get pushed back down. Couldn't even make it to the 14 EMA, just to get pushed back down and form this indecision doji with a little bit of green, just for the next candle to open and form that same bullish hammer. That's the type of price action that got me chopped up, because when I saw the hard rejection right here, it would have been hard to assume, okay, but on the very next candle, we're duper bullish. We're duper, headed back up to the 14. Hard to, that play right there certainly would have chopped me out if I was trying to trade it. Basically the way I got chopped out up here, and I'm glad I, again, saw what I saw, scalped back. There are days that this move, the two trades that I took positively after the negative trade, there are days that trade would have just sent me on tilt. I hurried up, got back in another one, and it instantly went against me at first too. I'd have been like, oh my God, the market just hates me. But again, this live stream is so beneficial because it helps me rationalize the trades I'm making, and it helps like take the time to let it play out. Sometimes I'm forced to be patient just while I'm thinking of what to say, how to explain, and it's helpful. I do have to, I think mentally I'm porting a lot of these tasks and challenges to the end of the year and next year, but I do gotta get on top of continuing to manage this YouTube account. I told you guys about the high last week. I think we're doing a lot better. You can barely kind of see the burn at this point. It was bad. If you go back to Thursday's stream or Friday's stream, Friday's probably even a little worse. You could see it. You can see it real good. And so that had slowed me down. I don't want to make all the content that's gonna live forever looking like I got punched out when I didn't get punched out. So I waited, but I do need to get on top of setting up the rest of this YouTube account, setting up the shorts and reels or Instagram, I guess. But yeah, oh my God, look at both of those top wicks. Oh, that's the wrong button. Over here hitting stuff on the phone. And so I accidentally clicked the wrong button on YouTube. It opened up a different streamer live stream instead of my own, but I got stuck looking at it because it doesn't look like they were trading the H6 contract. So they're also trading Nasdaq right now, and their level is at 25,100, just a little lower, 96 even. This is confusing. So yeah, there's a lot of people in the comments. I did want to pay attention to that. There's a lot of people telling them like, yo, you're trading the wrong contract. You're trading the wrong contract. I don't know if he's paying attention to that or not, but this just intrigued me a lot. Yeah, I find that really interesting. Obviously, you can trade different contracts, different accounts. But when I opened Trade-Evade, it definitely told me. And that now he's answering the comments and telling people that he's gonna switch. How would I? Yeah, I just don't. I don't understand. Nice reaction back to the upside. And it looks like, interestingly enough, the charts are still doing the same thing, even though they're trading at different levels. So this is another learning moment for me. So I know that, like logically speaking, the reason that these different contracts exist is because of when they expire. So I guess the Z5 from last year, let me click over to it right now. Yeah, that Z5 is trading in the hundreds, 117, 25,117, which is interesting. And funny enough, my support and resistance line copied over, but I wanted this line at this level. But it's keeping that level, but it's because, oh man, that is so interesting. So yeah, I guess I'm glad I switched to H6, but I'm not sure. Like, you know, typically thought most of us would be on the same contract. Dang, so interesting. All right, so you see, we had a strong reaction. That was a bullish candle that got all the way up to a 14 EMA, several, 20, 30 point candle, and it's being rejected pretty hard. 25,372 was the high, currently trading at 354. So it's a 20 point reaction back to the downside after that green candle filled all the way up. Again, very easy to get chopped up. Sure, a lot of bulls saw that break and the continuance and saying like, hey, we're headed higher. Maybe we want to test the 50 EMA this time. We've been chopping in this zone. Nah, strong rejection. And the rejection is being filled right back up. I want to see what this looks like on the shorter term time frame on the 2-minute chart. All right, so I wanted to see that move on the different chart structure, because this does still look like that this uptrend is holding, and now it wants to test the 50 EMA on this 2-minute chart, which is right there, 25,380. And on the 5-minute chart, that looks like 2 back-to-back bullish candles, one of them above the 14 EMA. So again, thank you for watching Money in the Future. I don't know if I even finished my last thought, just because I got so confused about what was happening and why people were trading different versions of the NQ chart. But yeah, I think for the top of the year, I'm gonna do a horses in the stable kind of thing. I'm gonna do my best to protect this account just because it's near and dear to me, but I'm gonna add some more. I'm gonna again, I wouldn't be able to do that if I was just trying to trade futures with Charles Schwab. So shout out to the prop firms. Not every prop firm has the same rules. Right now, I'm leaning towards Lucid because as my work schedule comes in for the top of the year, again, this is not my only job. I don't think any of us could sit in front of the computer, trade futures all day, and pay the rent every month. The minute you start taking a few losses in a row and you start thinking about the bills, and oh man, that seems horrifying. So this is a extra stream of income, and it's certainly not the main or the only stream of income. And as my work schedule rolls in, I think we got some big events coming up for January, some big nationwide events, big events. So as I work those, I think I really appreciate Lucid for obviously you have to trade enough in order to get your payout. You can't just hop on once or twice a month, take some big swings for home runs and then be like, send me my money. No, they want to see some consistency. They want to see traders practice habits that they can repeat. And so I appreciate that Lucid, at least currently, is a one-time payment. That prevents me from YOLOing. Look, I've definitely done it with TPT and Apex, where I'm looking at the calendar, I'm looking at the clock, and I'm thinking like, well, shit, I need to hurry up and get this account funded over the profit target because they're gonna charge me for it going another month. And that's not the name of the game here. Is to just give the prop firm money while you learn. You can learn on paper trading. You can learn a lot of different ways. But once you're jumping in the market, like, you're always gonna learn. I plan to always continue to learn every day that I do this. But I think the best lesson is actually jumping in the markets, getting your hand dirty, risking a little capital. But when I say a little capital, I do mean a little capital. I would never want to take a savings account, deposit it as a futures account, and then start trading. That's not how we, this needs to be fun money, spare money, extra money. I don't I don't drink as much as my cohorts that are in my same age group, or the places I get invited, the things that I'm asked to attend. I don't drink as much as my peers and stuff, and I do feel like this can be one of that. Okay, whatever my drinking budget or whatever, I'll just slide that over to the prop firm budget, so that there's some what all the stuff that you get from your vices. There's some thrill and some adrenaline and some dopamine and serotonin and all of the things that might come from getting smashed outside one night. Boss, I guess, could also be, I can find those same thrills here and budget for it correctly. Okay, yeah, I'll dedicate this much to making sure that I can always add some accounts, get some new accounts. I can't assume I'm never gonna blow an account, even keeping this comfortable trading strategy or whatever. It's, the algo flips sometimes. There's no guarantee. Look at how much I was respecting this bottom level. Look at how these last 3 green candles have reversed that bottom level. So maybe we're headed up. Maybe we have built this base and we found a new low for the day. So it's interesting. I want to keep an eye on these charts and these candle movements. Yeah, that's 3 big green candles back to back. It's funny, the live streamer dude I clicked, they are still pressing him. That was 10-15 minutes ago. They're still pressing him about being on the wrong contract. That would just trip me out, because again, if I'm trying to trade and I'm trying to learn at the same time, and you're reporting you're giving off signals that are hundreds of points different from what I'm looking for. And it's funny, the chart is doing the exact same thing, but just trading at a different level. Now, I know these contracts wrap up at the end of the year, so that's why those Z5s have lower volume. People have moved on. I also understand that thanks to a prop firm, we won't ever run into this problem. But once again, if I were using my TD Ameritrade or Charles Schwab or anything like that, and you were to hold one of these contracts through expiration, you are now on the line for the receipt and management of the commodities that you just traded. So as far as like ES and NQ, I think you would just be given the profits. I get, like, I'm sure your broker, your market maker, whatever, would just cash you out and give you profits. And I did read some stories. Obviously, we're trading futures, we're trading commodities. I like the Nasdaq, but there are others. There are a lot of people that trade oil, and a lot of people that trade other things like soybeans and green beans and chicken eggs, and there's plenty of commodities that can be traded in these markets. Precious metals, gold and silver and aluminum and platinum and whatever. There's the markets are there. And I was reading one about oil, and I was reading one about eggs, both where traders who do not exist in those markets accidentally let contracts expire in the green. I won the trade, and then the contract expired. And then you start getting emails and phone calls about like, hey, what do you want us to, like, where would you like us to send the several metric tons of eggs that you just successfully traded for? Or barrels of crude oil are things that can be traded and can get sent to you if you don't manage these contracts correctly. So I know that futures are contracts, and when those contracts expire, the bill can come due. Whatever you're trading, that thing can actually be cashed out to you. Now, I think the ES and the Nasdaq, they would still be financial instruments. No physical item is going to show up at your house or office or whatever. I believe that's how it works. But oil, chicken eggs, oranges, there are absolutely futures contracts that you could trade, and you could end up on the wrong side of a win and end up having to manage the receipt and delivery of the commodity that you just traded for. Fortunately, with a prop firm, that will never happen to us. So Lucid's never going to hit me up and be like, hey, good trading this month. What you want me to do with all this crude oil? It's just not going to happen. It's a financial instrument. Again, so there are many reasonable reasons why trading through a prop firm instead of, wow, look at this continued action. Just broke that round number of 400. I want to see how that was the level we were shorting from originally, and we got all the way down here. Look at that indecision candle before the reversal. So we're trading back at 25,400 pretty much exactly, and I want to see how price chooses to react, considering, look to the left. Boom, it didn't do well up here. Boom, it didn't, it popped, the last time it was there, but then it came down and below. A little bit of a pop, but a lot of times right at this 400 level, we saw a lot of price reaction, a lot of candle closes, a lot of wicks, a lot of things going on. Pushed below it, could not break the 300 level, and now we're back above it. So what do you think price wants for the rest of the day? This is a new contract. There's a 6. So what we're trading for is where this contract will close sometimes in 2026. But we're back on this MNQ. Actually, this is asking where this contract is going to trade at a specific date at the end of December 25. So we only got 2 weeks in December 25. I guess we can look over at, let's check out just like QQQ. Man, I used to, during my swing trading, it's not like I don't still swing trade, but like when I was heavy in swing trading, I made a really big bet on an EV maker. Just trying to decide, let me get back off this contract before I drive myself crazy. Just 420, and we're testing the 5-minute 50 EMA. Now I'm really interested in how price reacts up here. That was a truly bullish reaction. So QQQ is trading at 612, and I'm honestly not even sure how that correlates to this 25,000 number. I'll figure it out later. A little bit of reaction right there at the 50, but not too strong of a reaction yet. Just about 6 to 10 points back down. Yeah, you gotta also remember there's 3 minutes. Oh, look at, as you see the reaction back off that 50 EMA, there's 3 minutes, now closer to 2 minutes and 10 seconds before this 1 hour candle closes. That, remember, I just said in the previous hour, even if you have your trend in your direction, because that's still a 13-point rejection from that 50 EMA. Even if you have your trend decided with 2 minutes to go, a lot of times you get a reversal back in the other direction. That candle, just theoretically, as you look back at all these hourly candles, how often do you see an hourly candle close without a top wick or a bottom wick? I just mean it'll do all of the price action throughout that hour, but within that last hour, it's not closing at the bottom or at the top. It's gonna close somewhere in the middle of that candle. You're gonna have a top wick and a bottom wick on these hourly candles. It's almost a certainty. When you don't, you see a lot of price action to the respective side. So this candle here, no real top wick on this what I believe will be the opening candle on that day, because these are hourly. Yeah, so I believe there's an opening candle on that day. No top wick, but then that signified a lot of downside, a lot of selling pressure through that hour, meaning the price never came back up here at all. We just bled. But for most of these hourly candles, you're gonna see a top wick and a bottom wick. So that means the close of that candle will be not, again, not near the top or the bottom wick, somewhere in between. That is why what you see is at the close of these 1 hour candles, a lot of times price will reverse back in the opposite direction. But if you're looking at this pattern, should you be bullish? Are you not still bearish? Is this just not a relief hourly candle? Like, what do you there's still a lot to be observed as we trade at 25,410. Still a lot to be observed, including this reaction at the 50 EMA off the 5-minute chart. I want to try this. So that downtrend has yet to be broken. It respected that 50 EMA right there. We have the new 1 hour candle just opening. So I imagine, regardless of the direction that it chooses, it's gonna want a top wick, bottom wick. So it hit hard at that 420 at the 50 EMA and reacted backward, and we're right at the 400 level again, 25,405. Just holding up above these two EMAs, but still right on this downtrend has not been broken since this first big rejection candle up here. Just because we've chopped all along here, just because we had this big bullish relief. Remember, this was the close of a 1 hour candle, so it came back into this price action. Very typical. Not indicative of what's about to happen in the next hour. We could continue to climb. This could be sellers stepping in because Nvidia said something or Amazon said something or whatever. Sentiment can always change at the drop of a dime. So you do want these this is why you draw these levels, to see if they're respected. This is why you keep these EMAs on the chart, to see how these levels are eventually respected or not respected. As in with this candle appears to want to break the downtrend line that I just drew, as well as potentially pop this EMA. We had a strong reaction at it last time. We're currently getting a reaction again. On QQQ on the 5-minute, we are trading above the 14, below the 50, just like what we're looking at here. And the 200 is still hanging out up top. So these are, very similar chart structures. Let's take a look at Nvidia. That's what I meant to do this weekend, was set up the website so that I could also show Nvidia on here. And there we go with that break above the EMA. Now remember what it did down here when it broke. It broke above this EMA, got a wick just to come back down. So this is why we respect candle closes a lot more than candle wicks. This is a tough level that it's had to fight through previously. It's trying, but there's no guarantee, because you need some strong momentum for a move like that to happen. I would like to, again, this is where one of those like more daring challenge accounts would come into play, because theoretically, rather than using the EMAs as their simply as like respect levels and things like that, I'd also like to trade off of them. If I went short at this EMA on the previous candle and just rode that back down for a nice little scalp, same here. See, it's harder for me because I wouldn't know where to put my stop. If I entered a short right here at 420, where do you stop? Where's your stop loss? Is it VWAP? Because as we break above this, you see how I got on this, on the one losing trade for the day. As we break above VWAP, that, you know, it looks like it wants to go. Looks like it wants to test this next level. But VWAP's all the way up here at 25,456. I can't do 30 plus point stop losses. That would have been 36 points. That's just too much risk without the market structure to protect you from, you know, from that strong move happening. So again, if I'd have shorted at the EMA right now, I'd be down 8 to 9 points. And now look at their reaction, doing a similar move to what happened here, where it got up there, it broke the EMA, but will it close? With 15 seconds to go, will this candle close above that 50 EMA? I believe if it does, I'm gonna consider that probably means we've had a bullish EMA cross on the shorter time frame, as that candle just closed above the 50. Now, like I said, when I used to swing trade, I would be like, I need 2 consecutive closes in order to confirm some of these moves, because again, you saw what happened here and how it reversed right back down. We're starting to see this candle turn red, but maybe it treats the 50 EMA as support. Let's check out the 2-minute time frame. Yes, we just had it right here. I said I assumed we would be having a bullish cross on the shorter time frame, and right here the 14 EMA just crossed above the 50 EMA. That is bullish. Has not happened on the, you know, higher time frames yet, but that can sometimes be a signal of true reversal. I want to acknowledge the RSI seems pretty hot up here. That is 1, 2, 3, 4, 5, you know, green 5-minute candles in a row. Price action went from 25,342 all the way up to 431, 342. So a 90 point move in about 30 minutes. And look at that, just that fast, this candle is below that 50 EMA again. So again, these levels are important to see how they're treated, how they're respected. When I swing trade, I always said, oh, I want 2 consecutive closes to confirm a certain move. And back at 420, there's a little bit of a, again, reaction down here being pushed, but hanging out right at the 50 EMA on the 5-minute chart. I do think if this candle chooses to hold up here, then you'll get a little more of a bullish reaction. Maybe it just wants to chop in this area for a minute, let the RSI cool off. But I would not be surprised if it tests VWAP headed to, you know, if this is the low for this moment. And there's more upside, 25,430. like I said, if we could close above that EMA and hold, then I expected it to try for higher. No guarantee that it can get up there. If you were bullish down here, are you still bullish up here, or are you just taking profits? Yeah, looking on the 30-minute chart, you can see how much struggle price had in this area last time. Was never able to break 25,435. Definitely wasn't able to close up there. So as we trade around the 420 level and pop to the 430 level, you want to keep an eye on price up here, because at the higher time frame, would you say we're bullish or bearish? We're close to break even, only about 50 points down from even. But as it reacts up there again, I want you to just note, if we look back at this on the 5-minute chart, that 50 EMA, when I say 2 consecutive closes to confirm the move, one close and then right back. We are well below and cracking back below the downtrend, which could turn into nothing but a fake out again. So with another 20 seconds before this 5-minute candle closes, unless something drastic happens, I would say we're going to get a close back below the 50 EMA. On the higher time frame, we were not bullish, we were still bearish. This was so we'll qualify as a relief move, in my opinion, because we were down near the lows and you got to pop. But look at, if you check on the 15-minute chart, look at that top wick. It looks like it tested the 21, which is what I was paying attention to on the 5-minute chart last time. Looks like it tested the 21 and reacted pretty hard. And here we are back below the 14 and the 21 on the 15-minute chart. So this particular 15-minute candle still has another 4.5 minutes to go, but the 5-minute candle definitely closed below. So now let's see how price wants to react down here. Remember, we already had a bullish EMA cross on the shorter time frame. So if we look at the 2-minute chart, it came down to test this 14 EMA, but it's being held up. That looks like a short-term bull flag, if you ask me, but only on the 2-minute chart, as it pops 412. It's hanging out right here where the trend line that I drew is. And it looks like we want more downside. We just broke the 400 level yet again. So this would be considered a fake out. We broke above that level just to come right back down. Curious how that structure looks on the shorter term time frame. Looks like we reversed and came down to test the 21 to bounce. So that bullish cross just happened here, but this is why you want to see stuff like that happen on a higher time frame. There is no confirmation that that is the move. As we get rejected here and we come down, we're being held up by these EMAs. So if you're on the other charts and you're confused why it's bleeding slowly instead of quickly, why it's popping in those zones, So again, my idea of shorting at the EMA, I would have been right on this first rejection, wrong here, but then the same move that happened here, it came back down and made the move I wanted. So timing would have been the other very important aspect there. So again, back over this 400 level, just at 403. This seems to be the level of indecision or the level of chop that we're gonna have in this afternoon session. 25,400. Does it want these round numbers? Does it want to stay above these round numbers? Does it want to flush below the round number? All right, and price breaks down. We got 25,390s. So this range is being respected. Remember, I said on the 30-minute chart, if you look above, you see all those top wicks, and price could not get above there. I wonder where this support and resistance line came from originally, because the close respected it there, the wick respected it there. So I'm not going to get rid of it. I'm not exactly sure. You know, if I look left, like where it came from. I do see these bottom wicks last time. This line is at 413. That's really interesting. It's 430. And there we are in the 380s. So price is definitely breaking back down into this zone. The chop is being respected. It's being held up right here at these EMAs on the 5-minute. But that close and the rejection around the 50 has me still ultimately bearish. The longer term time frames have me bearish. The overall redness on the day has me bearish. And as we're getting a break below these EMAs, the downtrend has been respected. These EMAs being tested. Yeah, I want lower. I think price wants lower, and I'm missing my entry here.
Order filled.
I took that trade. I do see us coming back down a little lower. It's probably going to happen slow. There's going to be some fight back and some resistance as this move is made. Remember, this whole green move just happened. No guarantee. There's still another 3.5 minutes on this candle, so it could do plenty, including a move like that. So yeah, it was hanging up above those EMAs for sure. Hopeful on my side that that move was just kind of trapping some longs that thought we were going further, thought we were going higher. And you kind of just let the move play out. We were up 3 points for a hot second, still up 2.5. This is again slower momentum this afternoon chop. We're definitely trading in a range, so you're not gonna get those really fast reaction big candle moments. But I do think that, like, just again on the higher time frame, I see us close below all of these EMAs. I think I should respect this trade on the 15 and just say, yeah, there's 5 points. And I just imagine I'm gonna go ahead and take some profit here as this
Order filled.
trade continues to bleed. I'll take a 7-point win again. And look at that reversal reaction. To be honest, I think that's just my impatience. I want to see green, take green kind of thing. But this is back to my theory of getting a couple more test accounts for the top of the year. We'll just see after I got mad Christmas gifts to buy today. So let's see what the accounts are looking like after I finish my Christmas shopping or whatever. But I'm thinking, as a treat to myself, a couple more accounts at the top of the year, and then I won't be so antsy about see green, take green. I can let these trades play out, because this is one where I wanted to stay short, look at this higher time frame, and just say, man, look at that reaction candle there. So as long as we don't close back above the 14 on this 15-minute chart, just stay short. And so it did react against me. Let's check this out real quick. Oh wow, that candle is even flipping green. I want to check out that candle flip green. I want to check out check out my entry on that trade. Do that. I am 83% positive, 83% good trades today, 16% not. You saw the one negative trade, and that's still what I got to get better at, because that negative trade was 10 minutes long. It was my longest trade of the day, also my biggest loss of the day. But the whole reason I was opening this is to see, yeah, these last trades were both 7-point wins. The one I just took, so I'm very happy that I closed that trade based on the reaction that we just saw on the chart. Give me 1 second, I'll pull the chart back up. My entry was 25,378. That's not what I meant to do. Sorry, my entry was 25,385. That feels more correct. I was like, I didn't enter in the 70s. My entry was 85. So let's go back to see that prices reacted. I was on the wrong screen to be able to show you that whole move, but price definitely reacted back the other way. We're on the 15-minute chart still, because I was saying in the longer term on my patience test, I would have wanted to still respect that level, even though the trade went the other way. As long as it didn't close above the 14 EMA on a 15-minute, I think I would have been comfortable holding it. But yeah, look at that bullish candle just to come back the other way. Like, this is that chop that I'm talking about, where I'm glad I closed that trade, because it went against me hard after I closed, just to come right back down here. My entry was originally 85. Boom, where the price is currently sitting at 85. But I don't like how strongly it reacted down here, so I am happy I closed that one for a 7-point win, rather than waiting for the trade to come bleed all the way down here to this to my resistance zone again, support zone, because that chop, the move is still happening, the move is still coming, but look at that long bottom wick yet again. So I was even tempted to take the trade again and just say, ooh, it's playing out now. It reacted up, but the trade is playing out now. But no, look at those two bottom wicks. There are clearly buyers in this zone, as there were when you look left. So you have to respect that. The move might still come down, the move might still happen, but those two bottom wicks let me know I absolutely did the right thing in exiting that trade. See, so as much as my desire is to trail these things, to let the winners go, if we go back to the, see, yeah, even on the 15-minute charts, which I said it would have to close above the 14 for me to believe it, but this candle is still green. Nothing is stopping it in this next 70 seconds. So yeah, no close above that 14 EMA. It did pop it and touch it, and that would have spooked me. But again, on the higher time frame, just respecting that level, I think I would have been okay. This is why I want another account to be able to take those trades on and just say, hey, doesn't matter what happens on this particular account. My other account is good, it's green, and we're gonna keep those profits. But this one, we can test the waters, because I personally believe, like, I've seen more. That's a good. I wonder if I went back and like review these things. How many times am I happy I closed because of a reversal versus am I wishing I kept it open for more points? I wonder what that scale against itself is, like with those, how those weigh up against each other. Now again, still just hanging out at that 400 level. I want to see what this price movement looks like on the 5 minute. Still just a lot more chop, of course, but this hasn't quite invalidated like this short-term bull flag. It can and will if and when this candle wants to come down and eat up these wicks. But yeah, having taken that trade, if I'd have took that trade on the 15-minute chart and just let it play out, because even as it plays around here and wicks above the 14 and 21 EMA on the 5, you still have your ultimate downtrend holding. Looking down at Nvidia, kind of doing some chopping in the 177 area. Oh, and there's that 5-minute candle reaction back below those EMAs, and look at that wick. Look, just for it to be propped right back up. So I knew I drew that one, but on the shorter term, I still want to. No, I don't want to polygon. Oh, that's interesting. So you double click it to get rid of it. Oh, I just learned something. Okay, yeah, polygon. That was a really interesting shape or whatever. I didn't know what I could do with polygons, but now I see you can. Oh yeah, and I totally see where I could put that to use. In the meantime, just wanted to draw, like, follow this uptrend line, because you see how it's like clearly respecting that as well. So we have a short-term little triangle being built here. Like, well, let's see. It looks like it still wants to break that to the downside, if you ask me. But those wicks, it being held up right here is obviously informative. And there's a break. I would love to see how it reacts if it breaks this level. We still got another 80 seconds before this 5-minute candle closes. And so far, still holding up. It pretended to break down, but it's still holding that trend. So I'm gonna grab this line and just play with it a little bit there. Pause. Since that's about where it wicked to, but it's still clearly maintaining like that razor's edge of a uptrend. And this candle is definitely doing the indecision move on purpose. No real momentum in this move either way, whether the bulls or the bears wanted to see some price action. Like, no real momentum in this 5-minute candle whatsoever. I said it had 80 seconds to close, and it did virtually nothing in that last 80 seconds. So let's see what this next candle does as it opens. Starts green and wicks up, pops above those EMAs, and there's a little bit of that sell-off. So now there's a long wick at the top. No bottom wick at all. No bottom wick on this candle. So definitely want to let it form itself. Still got some top wick. Still clearly pushing higher so far. Waiting to put in a bottom wick on this candle at all. I do believe if it puts in a bottom wick, it's also going to break that trend. Let's see. Yep, there's a little bit of a bottom wick now. Yeah, look at it, just even more indecision. What, like, price flicking back and forth right around this zone tells you everything and nothing at the same time. It tells you everything, but the everything is nothing. All right, so with no real bottom wick on that candle for a minute, it looks like it wants to break the trend to the downside, only for it to be yoked right back up. And here is the more confirmed move. We're leaving from the 80s to the 70s. Still wicking up, obviously, but I do think there's more downside to come. If I go back to the 15-minute, let's see, obviously still no close above that 14, so you're good there. I wonder if I'd have drew that uptrend from the 15 since I'm playing the 15, but these lines are applicable on the 5, but not the 15 so far. It's still holding up here, but the 15-minute chart would have held up for the short. As of now, it's forming a little bit of a bullish hammer candle. It is 11:30 on the West Coast. On the 30-minute chart, you see a lot more of that indecision as it got pushed back down. It was starting to form a little bullishness even on the 30-minute chart, especially compared, like when you see on a shorter time frame. If I were to see a red candle like this one on the 30, I would assume more downside to follow in the previous candle. You got that body, but that long top wick above that body. This to me suggests more downside, but on the longer term time frame, it's tough because again, you might just chop. You got that big green candle right before it. 11:30. Okay. So yeah, I mean, I'm glad I didn't play this trade off the 5. I probably would have been better off just holding on to the vision that I saw on the 15, because I might have even taken a short seeing price break this downtrend, and there now it kind of wants to go, but it still keeps wicking up, still keeps holding on. Price wants lower. And there's the wick back up. Oh. That was rough. Okay. And yeah, see, I would have taken that short at the price break and just watched it wick back up and still been stressed out. I'm a momentum trader. I would have wanted a full flush back to this zone. It could pop at this zone again like it's done, but I would have wanted that candle to truly flush, and it's kind of doing the opposite. It's a slow chop and pop. So yeah, price wants lower, but it's also being held up, and that's it'll be infuriating price action if I was still in the short. Matter of fact, I was thinking about the short from the 80s at that price break, so I probably just would have taken it off anyway. Back to the theory of, I think I'm gonna add some accounts for the top of the year and be able to take some of these risks. It takes all of, I gotta figure out how to like blink them if I'm getting them all through Lucid, because right now I've been switching between Lucid, Apex, TPT, but if they're all Lucid, but I don't want to copy trade, I just want to link them. I gotta figure out exactly how to do that over the holiday break or whatever, because I would love to be able to, it only takes a few minutes, and there's price looking like it wants lower still. Should only take a few seconds to get between accounts, to get out of one account and get into a new one. And I'd love to be able to quickly see that this trade doesn't work for my main account, but it does work as a mental test, and just kind of see what that means. So I'm gonna go ahead and get rid of this trend line, I think. Actually, I'm gonna put it right there and see if we get another trend line break. We can now see that's the zone that's being held up. It was kind of invalidated from that previous uptrend, which is why I know that price wants lower. It already invalidated that little mini uptrend. Ooh, yeah, if you look at that signals top to me. Nvidia's going down.
Order filled.
I took a quick short because I saw Nvidia selling off. I see these bottom wicks though too. So yeah, let's take that quick little 4 to 5 point scalp. That was definitely my fastest trade of the day. Once I looked at the shorter time frame, this market structure absolutely looks like a top. Again, I still didn't get the bleed that I wanted. Something is still holding price up even as it slowly chops lower. And here comes the move again. If you kind of just hold on and have a little patience, and it'll still wick up in those moments. Let me go back and see. That was such a quick scalp, honestly, in and out so fast. Nvidia I looked down, I saw Nvidia bleeding, and I just kind of said like, hey, yeah, that means Nasdaq wants a little lower. You don't want to see that. New 2-minute candle just opened, trading between 71 and 69. Yeah. So I'm glad I opened up the chart on the 2-minute just to see, because on the 2-minute that looks like a clear top. Clearly we popped, we found a top, and then we either dropped or needed to find a new base. Now it doesn't explain where the buyers are down here with all of these bottom wicks, because again, we have bottom wicks all up here. So us bleeding down here means that these bulls that we're buying here are losing now. They are under, they are in the red. But again, you get these quick pops. Had I stayed in this trade thinking, hey man, it's gonna bleed all the way to my support zone, again, it would have reversed on you. So that explains why I take those quick scalps. It does still rationalize why I want another account to be able to, if I could flip to another account and hold a lot, like I want to hold it, like I guess I would just set the levels and log out. That's, ooh, yeah, now that I talk it out, I kind of like that as an idea. Set the levels and log out. It either does what you want or it doesn't, and like boom, you know, because that's the psychological part of this, is doing what you can to remove the stress. That's why you want to find an edge, you know, market edge. Use your indicators, use your EMAs, use trend lines, use support and resistance, use RSI, use MACD, use volume, use order flow, fair value gap, whatever edge you can find in the market, you use it for yourself. But yeah, and here's some of that. I still believe price wants lower. I'm glad I took a quick scalp right there. Let's take a look at it, just precisely how fast that was. My final trade, see, and that was still for, what is this, 4.5 points? Yeah, like entered at 73, sold at 69, but with the 73.75, sold at 69.25. So yeah, literally 4.5 points. And I sold at 69, prices at 64. But right as I said 64, it popped back to 68. So like, yeah, there was low, price wanted lower, but it's doing a real slow grind. That was an 8-second trade. The previous trade before that, 1 minute 54 seconds for a 2 to 3 point difference. So you still have to take what the market is going to give you, right? Yeah, like the market wants lower, but it's gonna pop at it's gonna give up a few points and pop right back. Give up a few points, pop right back. With that knowledge and information, I mean, it's Monday. Like today's Monday algorithm may just be the Monday algorithm. So let's go ahead and remove that trend line. It clearly broke it twice, and now the zone. So I'm interested to see how price reacts here. Big reaction back up off that zone, at least another 10-point reaction, just like we saw over here the last few times. Are you on the 5-minute chart? Yeah, just like we saw over there the last few times. Big pop right off that long-term support that I drew right there in the 60s. So we're back at 70. Remember, I sold out of that short at 69. Look at this pop back to 77, 78, 79. So just that fast, I closed my short at 69, and in that next 5-minute candle, we get a pop to the 80s. So yes, it was a quick scalp. Yes, price bled lower, and had I been patient, I could have gotten more. But had I waited too long, now I'm down 5 to 10 points, and I'm stressed out. You want to mitigate stress, and with these trades, you want to find your market edge. So yeah, back to next year's plans. I think some longer swings where I set my levels and log out. Like, hey, if it goes against me 50 points this way, cool, but I'm looking for this move. Or if it closes above this candle twice, but then log out and continue to scalp on a separate account. I think that's the move. We have NFP tomorrow. NFP non-farm payrolls, which a lot of times information like that leaks privately. It's why people like Nancy Pelosi, both speakers of the House, if it was, it doesn't matter if it was Nancy Pelosi or Mike Johnson. This is where people like that get the inside edge, where they can get away with insider trading because they are politicians. That non-farm payroll has probably already leaked. It's probably explains why we're seeing the stalling of the price action today. No strong moves in either direction. But if I had to guess, like I got friends, all of my evidence would be pretty anecdotal. But if I had to guess, like, the economy's not doing great right now. Like, and they've been hiding the data, they've been stuffing the data away, redacting the data, whatever they can do to not have everybody recognize how poorly things are going right now. But the markets are still at all-time highs. So if we're talking about non-farm payrolls, might not look too hot. And if they choose to release that information, it may indicate where the economy's headed in 2026. Yeah, we're being propped up by the Nvidias and Amazons and Apples of the world. Amazon will do fine because it's got enough footing in the computer web space as well as the holiday space. I'm probably gonna order some shit off Amazon today. Like, it is what it is. They have that market captured as well as the AWS market captured, so a company like Amazon will be fine, and then it'll inevitably prop up a lot of the rest of this market. The non-farm payrolls aren't going to come out great, but in my opinion, I don't think they're going to come out great. But a lot of the weakness in this economy is still masked by the success of these bigger companies, the Nvidias, the Apples, the Amazons. Like, they're doing well. And so you don't look at how I bet a company like Coca-Cola, like, if you looked at their numbers, that will probably like give a much better indication of where the market truly is, without the bias or the whatever. Coke doesn't have an AWS, Coke doesn't have an iPhone, but they have consistent consumer activity that fluctuates, I'm assuming, with the quality of the market. How many people out there are, there's going to be less parties, or I'm going to buy just the one thing of Coke for the party instead of two, or I'm going to get the cheaper option. I'm going to get the Pepsi or the Mr. Pibb or the whatever instead of the Coke, because I feel like a company like Coca-Cola, if you could see their real numbers and things, that would probably indicate like the honesty of where the economy, where the market is, what consumers are up to. We'll see like Target and Walmart for these for the holiday season, but the holiday season will be a blip. Like it might be an aberration because people still want to be happy, people still engage in retail therapy, but that I'll deal with that in a second. Nvidia bled $1. Yeah, this is some crazy price action. I've been saying for the last 5, 10, 15 minutes, yeah, price wants lower, yeah, price wants lower. But also what we see is every pop has been dropped, every drop has been popped. The buyers are buying the drops, the sellers are shorting the pops. And again, this is back to where a little patience goes a long way. There's gonna be some reaction at this level as we've seen previously. This is a long-term support resistance line. But yeah, had I taken that short on the 15-minute below the 14 EMA and just held, the 14 EMA has just been creeping down. I want to say it was at 407 when I took that trade in the 85. I want to say the 14 EMA and the 15 chart was at 407. And obviously price can, even though it hits the EMA, it popped up here. Absolutely no closing above the 14 EMA on the 5-minute chart in the last, in this hour for sure. And most of the session, all the session since 8 this morning, there's been no close above the 14 on the 15. It popped and kissed the 21 just to get sold right back down. So market is still respecting this level for now, but that would have been a really nice trade to hold on to from 85 down to, oh, look at that. See, I take 10 to 15 point scalps, and from 85 down to 65 would have been an excruciatingly slow chopping, dropping, chopping, dropping, popping, dropping, in, no, ate it. Oh wow, you guys have been on my face and not the chart for a long time as I said that. And that's funny because I came here wanting to tell you thank you for watching Money in the Future. Man, that's funny. If you remove the losses and if you remove the trading fees, I had a good day. A day above my desired goals. Thanks to the fees, I would like $8 more, and I could have got that $8 in that little drop if I was patient, but not that serious. Definitely not that serious on this account. Shout out to Lucid for one-time payments instead of monthlies, because that also allows me to be much more patient with my progress here. So that last trade was short in the 73s, closed at the 69s. Price right now, 25,375. So I would have been down 2 points if I'd have held through all of that price action. So this is why I close when I do. This is why I take the trades that I do. We are 10 minutes to the close of this next 1 hour candle. To be the start of power hour in the New York stock market. As I said last week, it doesn't always correlate to the action here because we close at different times and there's earnings reports after hours and all types of different things. So yes, thank you for watching Money in the Future. Let me give you a little bit of that and we will be right back. We back. And obviously price action hasn't done much in that in the few minutes that I took off. Remember, I cleared that last trade from 73 to 69. I closed at 69. Price is at 77 right now. So again, it did come all the way down to the support area before another strong bounce. We got 5 minutes and 30 seconds until the close of this 1 hour candle. Remember, the end of a 1 hour candle, a lot of times you get a reversal back in the other direction. Price rarely closes on the 1 hour candles without both a top and a bottom wick. So that, the zone we wick down there, very likely the low of this hourly candle. I would be blown away if something happened to have us close in the 50s in the next 5 minutes. Not like it's impossible. Anything can happen. It's the market. Anything can happen. But I would be very surprised. You're going to get a reversal at the end of these 1 hour candles. It's really interesting to look at the RSI on the hourly here, because it just shows that there's absolutely no strength. Like, the bulls may return at power hour, which again, 5 minutes in the stock market from now. Like, so no, certainly no guarantees of what to expect, but it would be very unlikely for this hourly to close below that support zone that it just wicked off of. It's gonna hold up there for the next 4 minutes and 20 seconds, virtually guaranteed. And that now you just wait and kind of see what price wants to do for power hour. Is that where a lot of buys come in to Nvidia, Apple, Amazon, Google, Microsoft at the end of the day? Or are people kind of sussed out by the AI theme that has been, the AI bubble in the market is big. And so, like, if people are kind of hitting that wall with AI, I couldn't tell you the amount of times that, like, I'm just scrolling on the phone and I see Grok give just straight up misinformation. The other one, yeah, this is where I wish I could pull up the tweet right now too. I'm gonna try. Hold on, y'all. Y'all check out the chart while I try to pull this up. Yeah, wait, I got it. So, check this out. You saw me searching that, obviously. I don't even know what account I'm on, but yes, you could see this scene playing above. You could see the person ask what this is, and you can see Grok tell them this is a scene. Don't be a menace to South Central while drinking your juice in the hood. This is 2 days ago. This is not like some old AI that, we fixed it since then or whatever. This is Grok straight up saying they all look alike. They all look alike. We can't tell them apart. Now, that's funny to me because it's funny. It's less funny when you think about who creates Grok, who inputs all this data. You hate that, like, that's how that guy sees the world, because that guy has a lot of power or whatever. We're on the website. But yeah, you see a movie scene, you see somebody add somebody fucking blue check. That's its own thing. The blue check asks Grok, hey, what's the title and story here? This is a scene from the movie Don't Be a Menace to South Central while drinking your juice in the hood. Wrong. Just factually wrong. There's a parody of the 90s hood films. In this supermarket scene, Loke Dog and Ashtray confront a harassing store owner who tells them to hurry up and buy, leading Loke Dog to pull a gun in comedic retaliation. That is an accurate description of that scene that happens in the movie. That's not at all what happened in this clip above. So I bring all that up strictly to say that it's pretty obvious the AI theme is starting to exhaust itself in today's market. I think the profit, the way Nvidia went crazy and all that, like everybody got their money. Google's Gemini is good. I like I think I use one of the homes companies, FYI, and I'm pretty sure FYI gets a lot of their LLM data from Gemini. And if I'm hearing correctly, Donald Trump is either speaking or about to start speaking. That would explain some more of this indecision. However, we are looking on the hourly candle as it closes in this next 1 minute. And I do just want to go here and acknowledge that price is back above the 400 level. That was a big reaction. Remember, so if I'd have held on to that short, wanting more downside, got cooked on this move right here, just super cooked. And now we're seeing a little momentum as that hourly candle closed and this new hourly candle opens. We're actually seeing price doing a little bit of moving. Actually, this was some disgusting slow chop, but at least now we're seeing a little bit of actual action. And here I am trying to decide, am I done for the day, or do I want to try to scrape that last $8 I was talking about? But yeah, I'd have got cooked on this move right here. That was such a bullish move, and now we're coming back below those EMAs just that fast. That was kind of insane that it happened like that. That is a bearish engulfing candle. So ultimately, you know, there's still 4 minutes until it closes, but that was a fake out, right? Yeah, we popped all the way above, got to the 50 EMA again, just to sell right back down, be below all EMAs. God, that was a fast reaction from the 400 level right here, or even higher, but down to 375. You got a 25-point reaction in just that one candle. But look how much price action happened in that candle compared to the previous 1, 2, 3, 4, 5, 6, 7. Yeah, this one candle, now 40 points to the downside, is bigger than the last 7 candles. So power hour actually did have a little power so far, but it's looking like power to the downside. Now again, I could see. There's the phone ringing, folks. I got a 12 o'clock and a 1:30, so this is the perfect time to just take our wins, call it a day. You know what I'm saying? Let me drop these logos on the screen one more time as price comes down to the 360 area yet again and then bounces. All right, thank y'all for watching Money in the Future. I'm gonna get out of here and go handle some life business.